Good morning everyone, welcome to the official YouTube channel of Officer Adda 24/7. My name is Amanjot and today we are going to discuss certain questions which are related to your principles and practices of banking subject, in which we are going to understand the concepts also while practicing the questions. So before starting the session, let me know, am I audible to all of you, and the PPT is also visible. Are we good to go? Questions which are related to your principles and okay, so audio is okay. Now let's start. So before starting with the questions, one important thing, that is, if you have not downloaded yet the Adda 24/7 application, do download the application, because you will get all the banking awareness related questions on the application which you can practice from there, and these questions or these quiz will help you to understand the basic terminologies related to the banking. Now if you are new to the channel, do subscribe the channel and press the bell icon so that you will get all the notifications for the upcoming sessions on Adda 24/7. Okay, so let's start with the first question, that is related to our ASBA. So it is asking about ASBA, a facility while applying and submitting an application for purchase of shares under a public issue is. So here we are asking about the ASBA. What is the full form of ASBA and what is ASBA? It is defined under the question. It is saying that ASBA is a facility while applying and submitting an application for purchase of shares under the public issue. So whenever an investor wants to purchase an issue, he or she gives an application or submits an application to his or her bank to block a certain amount of money in their account because they want to invest in certain new issues. That is known as ASBA. Now what is the full form of ASBA? What is the answer of this question? Is it application simplified by bank account? Is it application supported by block account? Is it application supported by blocked amount, or is it none of the above? What will be the right answer? Good morning, Prajakta. Now those candidates who are live in the session, do like the session and share with your friends and colleagues who are also preparing for JAIIB exam. Okay, so now let me know what will be the answer of the first question. Is it A, B, C or D? It's a very simple question. We are asking about the abbreviation, and while asking about the abbreviation, we also know the definition, what is ASBA actually means. So ASBA stands for, Prajakta is saying B. Okay, what about rest? So first of all, what is ASBA? ASBA is a facility which is provided to the investors whenever they want to invest in the new issue. Let's say whenever a new issue comes and an investor wants to invest in that particular issue, he or she block a certain amount of investment, what they want to invest in particular issues. So they block certain amount of money in their demat account by giving application to their bank. Okay, and whenever this company will issue IPO, whenever this company will issue new issues, in that situation the automatically amount will be deducted from the demat account of the investor. Now the right answer for the ASBA is application supported by blocked amount. It will be C, not B. Okay, so remember the abbreviations are also important. There can be a question on abbreviation which can be related to any financial information, any financial awareness or banking awareness topic. Okay, so the right answer for this question is C. Very good, Nisha. That is application supported by a blocked amount. We are giving an application to our bank and we are asking our bank to block a certain amount of money in our demat account so that we will invest in a certain issue. So the right answer will be application supported by blocked amount. Okay, now next question is asking about, name the term given to banks who are capable of providing ASBA service to its customers. Now which of the following will be the name of the type of banks who are eligible or who are capable of providing the ASBA services to their customers? Now we have discussed what is the full form of ASBA. It is application supported by a blocked amount. Now what will be the name of the banks who are eligible or who are capable of providing the permission to its customers to take the ASBA service from their banks? Is it A, B, C or D? The first option is saying stock certified banking entity. Second is saying equity certified banking company. Third is saying self certified syndicate bank. And fourth is saying ASBA, certificate bank. Now what will be the right answer for this question? If you do not know the answer of any question, then let me know that we do not know. We will discuss the question, we will discuss the answer, and we will carry forward. Okay, we do not have to waste that much time on a one question. Is it A, B, C or D? Here we have seen a word that is syndicate bank. Okay, there is also a term that is syndicate loan, which we are going to discuss in this session. Okay, see, if you do not know the answer, what will be the right answer? The answer will be your C option, that is self-certified syndicate bank. Now, what is self-certified syndicate bank? First of all, banks which are certified by SEBI, the banks which are certified by SEBI to allow retail individual investors to apply in IPOs using ASBA payment method are known as self-certified syndicate banks. Okay, so what is self-certified syndicate banks are? These are the banks which are certified by SEBI. What is SEBI? SEBI is the regulatory body of investment market, that is Securities and Exchange Board of India. So all the banks which are certified by SEBI to allow the retail individual investors to apply in IPOs. What is IPOs? Initial public offering, when the company is first time issuing shares to the public. Allowing individual retail investors to apply in IPOs by using ASBA payment method. Now these banks will be known as your self-certified syndicate banks, that is also SCSBs. Okay, self-certified syndicate banks. So the right answer for the second question will be your C option. Now next question is the application process that allow an investor to apply for issue using his bank account. Under this process, the application money is debited from the applicant bank account only if his application is selected for allotment. Now which of the following process is this? Now, under which of the following process an individual person is allowed to avail this service? So, we are saying that it is an application process in which this application gives permission to the investor, giving permission to the investor to apply in certain issues by using his or her bank account, and the money which we want to invest in a certain issue will be debited from the bank account of an individual person. That will be your demat account. So which of the following is this process? Is it ASBA application process? Is it BSBDA application process? Is it BCCMA application process? Or is it FIMC application process? Which of the following will be the right answer? A, B, C or D? Do mention the question number with the answer. Okay, whenever you are answering any question, then do mention the question number also. Saran is saying A, Nisha is saying A. Okay, very good. That's a very simple question we have discussed just now. That is ASBA, application supported by blocked amount. Now ASBA is the application process which allows an individual investor to apply for an issue by using the money deposited in the demat account or in his or her account by giving a certain application to the bank. Okay, so the right answer will be ASBA, application supported by blocked amount. Next question is which out of the following term represents market value per unit of a mutual fund? Now what is mutual fund actually means? What is mutual fund? If we are talking about mutual fund, let's understand what is mutual fund. Mutual funds are simply portfolio managers who collects money from various investors, okay, or they pool money from different investors, and after collecting this money they invest this money in diversified sectors. Okay, they collect money from different investors and then they invest that money in diversified sectors. Why they are doing so? To minimize the risk, because if we invest the bulk amount in a single market and the market will be at the time of investment, the market is in the risk, then the whole amount we have invested in a single market will be in the loss. So what mutual funds are doing, mutual funds are or we can say the mutual fund managers are the portfolio managers who collects money from different investors and invest that money which they have collected from different investors in a diversified sector, in a different sector. Let's say for example, I have a certain amount of money. I am not investing that amount in a certain sector or in a single sector. I am investing in the share market. I am investing some amount of my money in the capital market, then in the FD, then in the gold, then in the real estate. So I am dividing my money in different sectors because I do not want to take risk. So that's why we are investing in different markets, so that we will get we will not be able, so that we will eliminate the risk from the one market which can arise. So this is known as mutual fund. These are the mutual funds, and the investment we are doing is known as portfolio investment, and the process of doing investment in the diversified sector will be known as hedging. We have discussed portfolio investment and hedging in the earlier classes also. Okay, so this is the work of the mutual funds. Now everyone is saying that the right answer for the fourth question will be your NAV. Very good, right answer will be your NAV. Now what does NAV stands for? NAV stands for net asset value. It is net asset value. Let's say for example, if I want to invest in the shares of any company, I want you to answer that. Let's say I want to invest in the share market. Now how should I decide that in which company I should invest my money? Should I invest in TCS? Should I invest in Infosys? Should I invest in Axis Bank or ICICI Bank? How should I decide? Should I have to read the annual statement of each and every company which is registered with BSE and NSE? Or is there any other way to decide in which company we should invest so that we will get the higher returns? Now let me know, how should I decide that in which company I should invest my money? Very good. The full form of NAV is net asset value. Correct. Now let me know how to decide that in which company we should invest our money. Because it's not possible for me to read the annual statement of each and every company which is registered with BSE and NSE or who are giving their shares to the public. So how should I decide? Again, if you do not know the answer of any question, do let me know in the comment section that we do not know, so that we will discuss and we will move forward. See, whenever we are talking about share market, whenever we are talking about investment in the share market, what we do, we check out the index. Now what is index? Index is the list of blue chip companies who are performing well in the share market, which is the blue chip companies which are creating wealth for their investor, the companies who are earning profit in the share market and giving profit to their investors, and the value of their shares are keep rising. Okay, those companies are known as blue chip companies. And where we will find that which companies are blue chip companies in Indian share market, we have to look after the indexes, that is Sensex and Nifty. So whenever I want to invest in share market, I will look after the index, that is Sensex of BSE and Nifty of NSE, and that's how I will decide that in which company I should invest, which company is the blue chip company, which company is giving the higher return on the shares. Okay, now but if I want to invest in mutual fund, there are unlimited mutual funds in the country, then how should I decide that in which mutual fund I should invest, that which mutual fund is going to give me the higher returns? For that I have to understand, or I have to check the value of net asset value of each and every mutual fund. So before investing in share market, we check the indexes, or before investing in mutual fund, we check the net asset value. So what is net asset value? Net asset value simply helps us to understand about the mutual fund, like what is the actual per unit market value of a certain mutual fund scheme will be given by net asset value. So whenever we are investing in mutual fund, we have to check the net asset value of that particular mutual fund. Okay, now how to calculate net asset value? Simply that firm's assets minus liability divided by total number of shares outstanding into 100. This is the formula from which we can calculate the net asset value, and every mutual fund mention the net asset value of their specific mutual fund scheme on their website, from where we can understand that this mutual fund is good for our investment or not. Okay, so the right answer for the question number 4 is net asset value, that is NAV. And what is mutual fund? This is the mutual fund where they are investing the money of individual investor or the various investor in a diversified sectors to minimize their risk. Okay, we can't say that there is no risk in mutual fund. There is risk in mutual fund, but in comparison to investment in single market, there is less risk because we are diversifying our money. Okay, now next question is, name the regulatory authority with which a mutual fund has to get registered before making any offer to public. So which of the regulatory body is there with which the mutual fund have to register so that they will offer their investments, they will offer their securities or their schemes to the public? Is it SEBI? Is it RBI? Is it Department of Financial Services? Is it FIMMA? So which of the following will be the right option related to the regulatory authority where the mutual funds have to register themselves? Fifth is A. Okay, that is SEBI. What about rest? Good morning, Prince. Now those candidates who are live in the session, do like the session also. Okay, everyone is going with SEBI. That is true. So SEBI is the Securities and Exchange Board of India. So every mutual fund have to register with the SEBI before giving their mutual fund schemes to the public. Okay. If I am talking about credit rating agencies, who regulates the credit rating agencies in India? Who is the regulatory body of credit rating agencies in India? Now, what is credit rating agencies? Credit rating agencies are the agencies which gives us the rating after knowing the credit worthiness of a company or of an individual person or of a business. So credit rating agencies are the agencies which check our credit history, then they check our credit worthiness and gives us a certain ranking that how well credit worthiness a person or a company is maintaining. Okay, so who regulates the credit rating agencies in India? Let me know. CRA, it stands for credit rating agency. The name of credit rating agencies of India, I like, for example, CRISIL. Next is CIBIL. After that we have SMERA. After that we have ICRA, CAIR. These are the certain ONICRA. These are the certain credit rating agencies of India. If we are talking about international credit rating agencies, that is S&P, that is Standard & Poor, Moody's credit rating agency, Fitch credit rating agencies. These are international credit rating agencies. Okay. Now, who regulates the credit rating agencies? SEBI regulates the credit rating agencies in our country. Now, if we come to the venture capitalist. Now, if we come to the venture capitalist, who regulate the venture capitalist in India? SEBI, RBI, IRDA, IIBF, RDA, who regulates the venture capitalist in India? Let me know. Again, the SEBI, venture capitalists are also regulated by SEBI. All the investment markets are regulated by SEBI. Achha, if I am asking about who regulates the merchant banking in India? Who regulates the merchant banking in India? There are different types of banking which is performed by a certain bank. Now, who regulates the merchant banking in India? Yes, correct. Venture capitalist also by SEBI. Now, who regulates merchant banking in India? Now, what is merchant banking? Merchant banking is simply, when we are talking about merchant banking is simply when a bank, when a financial institution is providing the commercial services as well as investment services to the individual, we can say the customers. Okay, when the bank or when the financial institution is providing commercial as well as investment services as well as consultancy services to their customer will be known as merchant banking. Some are saying RBI, some are saying SEBI. The right answer is SEBI. This is the only type of banking which is not regulated by RBI. It is regulated by SEBI. Do remember this. Okay. All the other types of banking will be regulated by Reserve Bank of India, but only merchant banking is regulated by SEBI. Remember this. Okay. Now let's move forward to the sixth question, that is a syndicate loan. Like now we have discussed earlier the syndicate bank. Now we are asking about the syndicate loan. A syndicate loan. Now what is syndicate loan? The definition is also written in the question. Do make sure that you understand the loan. What is the syndicate loan? So syndicate loan is also known as syndicated bank facility. Okay, it is a loan facility provided by a group of lenders who work together to provide funds for a single borrower. Under this facility, the borrower could be. So what is syndicate loan? Syndicate loan simply is a type of loan, is a credit facility which is provided by the group of lenders. When two or more banks are providing loan to a certain single borrower, a single customer, that is known as your syndicate loan. Okay. Now in syndicate loan, which of the following can become the borrower or can take the loan from group of lenders? Let's say for example, Mr. Ambani wants a certain amount of loan from the bank, and there are certain banks who have maintained a group of lender, who become the group of lender, and they are providing loan to the Mr. Ambani. So let's say State Bank of India, Axis Bank or ICICI Bank, these three banks has form a group and they are providing loan to Mr. Ambani only, the single borrower. They are providing loan to the single borrower. That loan will be known as syndicate loan. Okay, now let me know what will be the answer of the following question. A corporation, an individual, a government, these are the three borrowers, and the options you have to choose from, that is only 1 and 2, only 2 and 3, only 1, and all 1, 2 and 3. What will be the right answer? Sixth is A, that is only 1 and 2, that is corporation and individual. Okay. What about rest? Now do remember the full form also. Okay, just say for example we have discussed what is syndicate loan. So do remember the full form or definition of the syndicate loan also. We are getting two answers, that is A and D. Okay. So the right answer for this question will be D. A corporation, an individual, a government, all of three can take loan under the syndicate loan facility from the group of lenders. Okay, so the right answer for this question will be your D option, that is all 1, 2 and 3. Now syndicate loan is a type of loan, is a type of credit facility when a group of lenders, group of financial institutions are providing loan together to a single borrower. So the right answer for the sixth question will be your D option, that is all 1, 2, 3. A government can take loan under the syndicate loan facility, a bank, a corporation can take, an individual can take. So the right option for the sixth question will be your D, not A. All are the answer. Now next question. Which of the following are the feature of primary market? Which of the following are the feature of primary market? We are talking about primary market, which is a part of capital market. Yesterday we have discussed about the primary market. So you have to tell which of the following are the feature of primary market. First is saying it is a market for new long-term equity. Second is saying the securities are directly issued by company to investor. Third is saying it is also known as best quality market. So which of the following will be the right answer related to your primary market features? First is only 1 and 2, second is only 2 and 3, third is only 3, and fourth is all 1, 2, 3. Now what will be the answer of the seventh question? Now from today onwards we will start a certain thing, that is we are going to discuss, or we are going to have a homework as a terminology related to your PPB subject. Okay, in every session we will discuss, or I am going to give you a homework related to a certain term which you have to study, and in the next session we will discuss what that term is actually means. So at the end of the session we are going to have a homework which is related to your terminology of financial awareness or banking awareness, and we will discuss about that particular term in the next session. But you have to answer about that term in the comment section. You have to give the answers what I am going to give you the homework in the comment section. Okay. Now seventh is B, A and D. We are getting different answers, B, D and A. Okay. See, first of all, when we are talking about primary market is also known as new issue market. Primary market is also known as fresh issue market, where the company is issuing shares and the investors are purchasing shares. Only selling only purchasing of shares can be take place in this particular market. You can't sell that particular security again. So whenever we are talking about primary market, is a market of new securities, or we can say the fresh issues, or only purchasing will be done. You can't sell, you can't resell the security in the primary market. Now the first option is very much correct, that it is a market for new long-term equity. That is correct. If we are talking about the security, second option, the securities directly issued by a company, it is true, because when we are talking about a company, what we are saying, company issues shares, okay, and investors purchase those shares, and investors can't resell these securities in the primary market. If they want to resell, if they want to sell this security, they have to go to the secondary market. They have to go to the secondary market, okay. So the second option is also true, because it is saying that the directly issued by the company, because whenever investors are issuing securities, it will comes under the secondary market but not in the primary market. Now the third option is saying it is also known as best quality market. Now this is not true, because the best quality market is known as gilt market, that is gilt edge market. Now what is gilt edge market? It is a part of secondary market in which we sell or purchase government securities, and it is regulated by Reserve Bank of India. And as we know, government securities are the securities which minimum risk or no risk, है ना? Whenever we are talking about government securities are known as risk-free assets. These are risk-free assets. It means whenever you are investing in government security, there is no type of risk involved in this investment. It is confirmed that if you have invested in government security, you will get your returns at the maturity, at the time of maturity. So the gilt edge market is known as the best quality market, because in this market we deal with the government securities, which is regulated by RBI, because RBI is the agent of Government of India. RBI perform the selling and purchasing of government securities. So the third option is not correct. So the right option will be A, that is only 1 and 2. So the right option related to the 7th question will be your A option, that is 1 and 2. Okay, clear now? The right answer will be A. Those who said A is the right answer. Okay. Now let's move forward to the 8th question, that is what is the minimum CRAR mandated for NBFCs by RBI? Now first you should know what is NBFC, and second you should know what is CRAR. Okay, now this is the answer related to your current affairs. This is the answer related to update in the CRAR by Reserve Bank of India. So you have to cover with the static knowledge of banking or static knowledge of principles and practices of banking. You should know what is the current updates has been done by Reserve Bank of India. So first let me know what will be the answer of the question. Is it 8%? Is it 10%? Is it 12%? Is it 15%? And then we will discuss what is CRAR and what is NBFCs. So what is the minimum CRAR mandated for NBFCs by Reserve Bank of India? Let me know what will be the answer. Those candidates who are live in the session, do like the session and share with your friends also. Very good. NBFCs stands for non-banking financial companies. That is true. What does CRAR stands for? Venkat is saying 8th is C, that is 12%. Okay. Isn't it for public sector banks? 12% 12% CRAR. Is it for public sector bank or NBFCs? Srinivasan is also saying C, that is 12%. Okay. See, we are talking about non-banking financial companies. Is it same for public sector bank and non-banking financial companies? So the right answer here is 15%, not 12%. The NBFCs have to maintain CRAR, that is 15%. Okay. 12% is for the public sector bank, not for the non-banking financial companies. Now let's understand what is non-banking financial companies. First of all, we have financial institutions. We have certain financial institutions in India, and these financial institutions are divided into two parts. First covers all the banking institution in India which is regulated by RBI, and all the types of banks will come under the RBI. First is scheduled bank and second is non-scheduled bank. Now when it comes to other financial institutions, those are known as non-banking financial institution. Now non-banking financial institutions cover First of all India financial institution, that is NABARD, SEBI, NHB and Exim Bank. All these are the all India financial institution. And next thing is it covers the NBFCs, that is non-banking financial companies, and the third is primary dealers. They cover also primary dealers. Now these are the non-banking financial institutions which are working in India. Now when we are talking about NBFCs, NBFCs stand for non-banking financial companies. Now the non-banking financial companies have to register with, or they registered with the Companies Act. Okay, whenever a company wants to work as a non-banking financial company, they have to register themselves, or they have to be the part of the Companies Act 2013. Okay, but also they have to be registered with RBI. They also have to be registered with RBI, because if they want to work as a non-banking financial institution in our country, they have to be registered with Reserve Bank of India. So non-banking financial companies are registered or started with the help of Companies Act 2013. But if they want to work as a non-banking financial institution in India, they have to register with the Reserve Bank of India. Right? Now let's move forward. Now what NBFCs do? Non-banking financial companies are the companies which provide loan facilities or advance facility in the investment sector. It means, for example, the investment in shares, bond, debentures, etc. Then investment in the any industries which is related to the manufacturing or service sector, except those industries, those institutions which are the part of the agriculture institute. So those institutes which are involved in the agricultural activity, which are involved in the agriculture finances, or which are agricultural institutions, NBFC do not provide loan to them. Okay. Now next thing is NBFCs do not have to maintain the reserve ratios. It means CRR, SLR do not have to maintain by NBFCs. Then there are two types. So broadly we have divided NBFCs in two types, that is known as NBFCs D, NBFC D, and second is NBFC C. Now when it comes to C, it represents the credit, and when it comes to D, it represents the deposit. Now there are certain NBFCs which can take deposits from the public. Earlier they were not allowed to take deposit from the public, only banks were allowed to take deposit from the public. But now NBFCs are also allowed, and those NBFCs are known as NBFC deposit, or the example for this is RNBCs. Okay, RNBCs, fiduciary non-banking companies, are the example of NBFCs deposit, in which they can take deposit from the public, but not the demand deposit. They can take the term deposit. They can only take from the public, that is term deposit, for the minimum period of 1 year and maximum period of 5 years. Okay. Now when it comes to credit NBFCs, they are the companies which are providing loan and investment facility, or sorry, loan and advances facility. They can provide loan for the hire purchase. Okay, they can provide loan for the equity investment, shares investment. They can provide loan bond for bond investment. They can provide loan for the debentures also. Okay, etc. So these are the NBFCs. They are providing a credit facility or advance or loan facility, we can say. And deposit taking NBFCs are those NBFCs which are taking deposit from the public, but only term deposit. They cannot accept the demand deposit. Okay, these are NBFCs. Now let's talk about CRAR. What does CRAR stands for? It stands for capital to risk weighted asset ratio. Okay, CRAR stands for capital to risk weighted asset ratio. That is also known as capital adequacy ratio. Now this capital adequacy ratio or capital to risk weighted asset ratio is defined under the Basel Committee of Banking Supervision. So Basel Committee of Banking Supervision has provided a certain regulations to all the international banking or international banks or global banks to maintain a certain amount of their risk-free assets with themselves. So when we are talking about capital adequacy ratio, how to calculate this? Capital adequacy ratio will be equals to your total capital, which will be divided by your risk-free asset, risk-weighted asset, not risk-free assets, risk-weighted assets into 100. Now what is risk-weighted asset? The asset which the bank or financial institution has provided for the loan. Now when you are giving loan, the amount of loan you have given to the public, it become a risky asset for you. It can be returned by the public or it cannot be returned by the public. So that asset will be known as risk-weighted asset, and every bank or every financial institution have to maintain a certain percentage of their risk-weighted asset in the capital adequacy ratio as per the Basel norms. Okay, so for NBFC it is 15%, for public sector bank it is 12%. Okay, so do know what is NBFC, what is CRAR, and what is the current CRAR targets given by RBI to the banks and the NBFCs. Okay, Now let me know all the terms clear to everyone. Is there any doubt in this particular topic? Let me know. Clear to all? If there is no doubt, then do write that clear. There are three basal norms. Basal norms are also a part of your syllabus. These are the three basal norms which we have to study in this particular subject. Now let's move forward to the next question. That is your 9th question, which is asking that which of the following are the feature of forward contract. Now the next question is related to the forward contract, that is your derivative, type of financial derivative. So which of the following statement are the feature of forward contract? First statement is saying there is a counterparty risk in forward contract. It is asking about the forward contract. First is saying there is a counterparty risk in the forward contract. Second is saying each contract is customized and hence is unique in terms of the contract size, expiration date and asset type and quality. Third is saying on the expiration date the contract has to be settled by delivery of asset. Now which of the following features are true regarding your forward contract? Is it only 1 and 2? Is it only 2 and 3? Is it only 1 or is it all 1, 2, 3? What will be the right answer? We are talking about forward contracts. Now what is forward contract? Forward contract is a financial derivative. Now what is derivative? We have discussed yesterday already that the derivative is a product whose value is derived from two or more basic variables. That is known as your derivative. And the basic variables are known as underlying assets. Okay. Now let me know which of the following will be the right answer, A, B, C or D of the 9th question. See, if we are talking about the forward contract, now forward contract are over the counter derivatives. These are over the counter derivatives. Over the counter derivative means that there is no mediator between the two parties who comes under the contract. There are two persons who by themselves decides the contract size. They decide the expiration date of the contract, they decide the type of the asset, they decide the quality of the asset. There is no particular mediator between the two parties. They decide everything related to their contract. So that is known as over the counter derivative. It means there are two persons and they are agree over a counter that they want to sell or purchase a particular security. So they comes under the contract. Okay, they comes under the contract, a certain contract. There is no mediator. So it is obvious when there is no mediator, there is a chances of counterparty risk in the forward contract. Because there is no mediator, there is a chances that in the future date which you have decided for the exchange of your goods or exchange of your assets, the counterparty will reject or counterparty will decline that I do not want to purchase this or I do not want to sell this. So there will always be a counterparty risk in the forward contract because it is the over the trade counter. Okay. Now next, it is true that each contract is customized. Each contract has its unique contract size, its unique expiration date, its unique asset type or quality. Now when it comes to third point, that is saying that at the time of expiration date you will get the contract has been settled by delivery of the asset. Okay, it means as we are saying that contract date has been coming. Always when we are talking about forward contract, future date is decided by the parties, and also in the future contract it happens the same, that you are talking about the future date. So the right answer for this is the D option, that is all 1, 2, 3. All the three are correct regarding the forward contract. Because there is no mediator, there is no stock exchange or commodity exchange between the two parties, there is a counterparty risk involved. Then every contract is customized by both the parties. They decide what size of contract they want, what quality they want, what type of asset they want. and what at which date, at which future date they want to settle their contract, and when the future date will come, they have to exchange their assets to settle the contract or to end the contract. Okay, so the right answer for the 9th question will be your D option, that is all 1, 2, 3. Now let's move forward to the 10th question, that is asking about anchor investors. So SEBI has extended the lock-in period for anchor investors to 90 days for half the holdings. Now, who are the anchor investors? Who are the persons, who are the investors who are known as anchor investors? So you have to remember two things from this question. First thing is that SEBI has extended the lock-in period. Lock-in period to maintain the holdings of the security for the 90 days. And how much security? Half security. How much amount you have a purchase of the security? How much investment anchor investors had done. About from that investment, they have to hold half of their holdings for 90 days. So this lock-in period is extended by SEBI. This is the current update related to your investment market. Now the second thing you should know, that is who are anchor investors. So anchor investors are the high net worth individuals investing more than 2 crore in IPO. Second is saying investors who use hedging to minimize their risk. Third is saying investors who take advantage of arbitrage. And fourth is saying investors to whom shares allotted before IPO opens to public. Now, which of the following will be the right answer? A, B, C or D? First of all, let's understand one term which is in the option, that is arbitrage. Now, what is arbitrage? When an investor have an advantage of price difference in the two different market at the same time while selling the same security. So whenever a person invests his or her security, whenever a person is purchasing or selling his or her security in two different market at the same time, and the same security is sold and purchased by the investor, okay, and they got the advantage of the price difference in the two different market, that will be known as arbitrage. Let's say, for example, I have purchased the shares in the primary market. Okay, when the company has issued new issue, then I have purchased the share at the amount of, let's say, 500 rupees per share. As soon as the company listed in the stock exchange their IPO, the value of share has been raised. Now the 500 rupees of share become the 1000 rupee of share. So what I am doing, I have purchased the share in the primary market, and then as soon as the company is listed, I have sold that particular share in the secondary market. So what I got the benefit of price difference. I purchased in the 500 rupees and I sold in the 1000 rupees. Now this price difference, I have got the advantage, and that will be known as arbitrage. Okay, that will be known as arbitrage. Parul is saying D. Kuldeep is also saying D. Very good. The right answer will be your D option. Anchor investors are those investors to whom a company issue its IPO or issue its shares for the publicity before applying or before opening for the IPO for the public. So whenever we are talking about anchor investors are those investors to whom company give its shares before IPO opens to public. Okay, and why we are giving this particular shares of a company before IPO opens for the public? So make sure that the publicity of the company will be done in the market before it gives IPO for the public. So for the publicity, the company before opening IPO for the public, they have provided a certain shares of their securities of their company to the investors, and those investors are known as anchor investor. So whatever amount of investors or whatever amount of shares we are giving to the anchor investors, they have to hold 50% of that investment, 50% of that value which is given to the anchor investors for 90 days. Now this is the update in the investment market. Okay, so we have discussed two things in the last question, that is 90 days, the holding period for the half of the holding for the anchor investor, and the anchor investors are the investors who to whom the shares will be shared by the company before IPO opens to the public. Okay, now let me know, out of these 10 questions, how much you have done correct. Out of these 10 questions, how much you have done correct? Always make sure that you are counting your correct answers and incorrect answer which you are giving in the session, and do participate in the session. It doesn't matter you are giving the right answer or you are giving the wrong answer. We are here to learn. Okay, if we do not know or if we give a wrong answer, it doesn't matter, because this is the practice sessions. These are the sessions where you are learning terms. So do active in the session, do participate in the session and give answers of the questions. Okay, now let me know how much you have done correct. Now the homework for all of you, the term of the day is SWIFT. Now what you have to answer, you have to give the answer that what is the full form of SWIFT. Then you have to give the answer that where is the headquarter of SWIFT. Then you have to tell that what is the how many digits or how many alphanumeric digits are there in the SWIFT code. And next, what the annual meeting of SWIFT is known as. The annual meeting of SWIFT is known as. So you have to give the answer related to the SWIFT term in the comment section after the session ended. So you have to answer the 4 things related to the SWIFT, that is full form of the SWIFT, where is the headquarter of the SWIFT, how much digits are there in the SWIFT code, and what is the annual meeting of SWIFT is known as. Okay, this is the homework for all of you which you have to answer in the comment section. And yesterday and tomorrow when we will start the session, we will start with the explanation of the SWIFT. Okay, so let's end the session. If you have any doubt in any session, you can ask in the comment section. For example, if you are watching the videos after the session ended, if you are watching the video after the live session, you can ask your question in the comment section and you have to answer this term in the comment section. Now last but not the least, if you have not downloaded yet the Adda 24 application, do download the application. It will help you to practice more questions on your PPB subject. And if you are new to the channel, do subscribe the channel and press the bell icon so that you will get all the update related to the upcoming sessions. Now one information for all of you, those candidates who are looking forward for the English medium batch. Let's say for example every morning 7:30 AM we meet in a session, but we only deal here or we only practice here the number of questions, that is 10, and we understand a certain limited concepts related to these questions. So if you want to understand all the concepts, if you want to cover all the whole syllabus of your all modules A, B, C and D, then this is the batch for you. This is the dedicated batch where you will get the right study material with the right guidance with these faculties, and you will also get the Macmillan book with this particular batch. Now what you have to do to enroll in this particular batch, you have to go to the Adda 24/7 application, or you can visit the Adda web page. There you will find the JAIIB CAIIB section and you have to go to the particular batch. This batch is starting from 16th of April and PPP and classes will be starting from 18th of April. So this batch is starting from today onwards. So those candidates who are looking for a dedicated batch, who are really serious about their preparation and you really want to qualify this particular exam in this attempt in the June 2022, then do make sure you check this particular product of ours and do check the study plan, that how we are going to cover all the modules, all the syllabus related to your 3 subjects. Now to enroll in this particular batch, you can use a code that is Y496. You will get 77% discount on the product. And if you purchase from Adda 24/7 application, you will get 1% additional discount and you will get 78% discount on this particular product. Okay. So that's all for today. Thank you for joining this session and stay safe.